Hello, 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 everyone. Hey everyone, just want to jump on here real quick, give you a little bit of information. Today I am talking about a renovation loan, a common popular type of renovation loan. It is a 203K loan. So a 203K loan is a really good product that I think is oftentimes underutilized because people are unaware of what it is exactly. So you want to make sure that you keep watching this video. I'm going to share with you all about a 203 renovation loan, how you can use it and benefit from using it as well. So first, we are specifically talking about a FHA 203K loan that is available and has the same criteria as a normal FHA product. So, oftentimes, while working with a lot of buyers, it often gets a little tempting and tantalizing looking for inventory out in the housing market. And we'll see bank owned properties come to the market at a great price, great value. But the only problem is it needs quite a bit of work to make it move in ready for that buyer. And traditionally, with a traditional 203K loan, it will not allow you to purchase that property and make renovations. So, before I really dive into a 203K loan, I want to step back and talk about the FHA product for just a second. So the FHA loan is designed for first-time home buyers to move into a property. And it's with the understanding oftentimes first-time home buyers may have a little less than perfect credit score. So their credit score may be on the lower end, and they also may have a lower amount saved, so lower down payment, but it allows them to get into the housing market, purchase their first home. But with that being said, the guidelines do not allow for a potential buyer to move into a property that needs repairs because basically looking at it at a high level, they feel that this is going to set you up for failure. So if you moved into a property and you already had lower credit score, probably less savings in the bank, and now the savings, majority of the savings that you did have, whether you pulled it from a 401k or whatever you have, the savings that you did have, you put it into your down payment and your closing costs to purchase this property. Now, if you move into a property that needs extensive amount of repairs or is not quite move-in ready, they feel that it's too much of a liability and a risk that you can move in and immediately default on that loan. So therefore, for FHA, they're going to require that the property is move-in ready. This is oftentimes why sellers kind of frown upon of FHA loan. And if given the opportunity, if they receive multiple offers on their property, they kind of rate the offers that come in. So the highest rated would be cash. Cash is king, right? So that cash offer is usually looked at as its highest and best, assuming that the offer amount is where it needs to be around the asking price. Secondly, that seller is then going to look at that conventional loan because that's the second strongest outside of cash. When we're talking about residential real estate, that conventional loan is the second highest or second best type of loan. And then you have your FHA product that's out there. Well, one of the reasons why they don't like dealing with the FHA loan because there's going to be an inspection done on the property. And so that inspection that's going to be done, that when the appraiser comes out, they're going to make sure that that property is in move-in condition, and they may require that seller to make some upgrades to the electrical panel, doing some scraping and painting around the home, placing some handrails around the home. So there's like a number of things that appraiser slash home inspector could require and make you do. So that's why the seller likes to look cash, conventional, and then FHA. Now, fast forward. So FHA did not ignore the fact that buy and understand that buyers may want to buy one of these properties at a deep discount, right? So just think a property could come on the market. It has all of the square footage that you're looking for. And then that property is at a deep discount of maybe even half of what the value is. And you could potentially make some renovations and repairs to this property and either bring it up to market value, or you may immediately have equity in there. So for this, FHA then came out with another product called the 203K loan, which is a renovation loan. So you can purchase a property that may be bank owned or foreclosed on or needs extensive repairs. You just have to make sure that you're in the right loan product for it. So I will tell you though, when you are looking at a 203K loan, the process is a little bit longer. And if you don't have everything lined up, like your contractors, it could take anywhere from 40 to 60 days to close, and potentially a little bit longer if you don't have things in a line of the way that it needs to be. So we're going to talk about that a little bit here as to how you can prepare yourself for a 203K loan. So with that 203K loan, it's going to cover everything from any type of major repairs on the property. It pretty much can cover everything on a property. Now, you're not putting in a swimming pool if that's the kind of upgrade that you want to do, but it will get that property to a move-in condition for you where you can move in, be comfortable. So the biggest thing, a lot of buyers, they don't like the delay. So oftentimes buyers need to move right away. So they just don't have that time to wait to close on the property. Because you have to remember, we're talking 40 to 60 days to close on it. And then we're talking about the additional time after that to get it to a point where it's actually move-in ready and the renovations have been completed on the property. So what typically happens is we'll just say that you go out into the marketplace and you find a home for $50,000. And that home for $50,000, it needs a lot of repairs, from it needing a roof, it needs new flooring, it needs a new kitchen, bathrooms, whatever it is. So then from that point, you kind of gauge and have an understanding how much those repairs are going to be on the property. And so say that property needs another $50,000 to make a repair. So basically what happens is the bank will cover $100,000 in that example, is what the loan is going to be for. So they're going to give you $50,000 to purchase the property. Then they're going to give you the additional $50,000 based on the quote from your contractor, another $50 to make the repair. But when you close on that loan, you're going to look at it in total. So in total, it was going to cost $100,000 for the property and the repairs. So that's what your loan is going to be on. So that $100,000 amortized over 30 years, just like any other loan. So you don't look at it as two separate loans. In the end, it will be just one loan. They just allow you to purchase the property, and then they do work on a draw system with your contractor for the additional money and the repairs on there. So obviously, health and safety is going to be number one priority when it comes to a 203K loan. Again, FHA is still going to focus in on making sure that you move into a quality product, because this is still a FHA product. So they want to make sure that the property is in a good, solid condition, even after it's been repaired on the property. So they're always going to look at those safety concerns. So, and from there, you can do whatever add-ons and updates that you want to make, as long as at the end of the day, your repairs plus the acquisition or the purchase of the property is not going to exceed the overall value of the property in the long run. So with the 203K loan, so you go out, you meet with your realtor, you go out, you find the property that you're looking for, that you want to move forward with. You take a look at it, and you need to have a contractor lined up to come out to the property. You want to make sure when searching for a contractor that contractor has experience with working with a 203K loan. And when I say experience, you want to make sure that can be licensed and bonded in whatever areas that's needed for the projects that's going to be done on the property. So if you need an electrical panel, then you want to make sure that you're talking to an electrician that is licensed through the state so that they can pull the proper permits, because this is going to be required. Many of the delays that we see that happen on these 203K products is due to the fact that the contractor getting them there. So the more you have that in line, the easier it is for you to, and quicker to move through the whole entire process. So that contractor, you want to ask these questions up front. You want to know if they've done a 203K project before. Are they licensed and bonded? What is their style for submitting offers on a property? Because it's going to be required that the property has an itemized estimate completed, line by line, what exactly is being done on the property. So you're going to get that contractor out to the property. They are going to give you a complete written estimate. You then submit that estimate into the loan officer. The loan officer is going to review it. And then they actually bring into the transaction a HUD like administrator or a HUD contractor into the transaction. Now, this is not going to be your individual contractor. It's kind of more like an intermediary into the whole process to make sure that you as the buyer are not overinflating the numbers, trying to get more money out, and then also helping you as the buyer to protect you, to make sure that what the contractor says are the numbers is realistic and doable, because you never really want to get into a situation where the contractor gives you one amount and they underbid it by a considerable amount, and now you've closed on your loan documents and you don't have enough money to make the repairs. Gets you into a bad situation. So that HUD contractor is going to take a look at the property, walk through the property. They're also going to look over the quote as well. They may question your contractor on some items on there, but they're going to give the final okay or say so. Now, be prepared. This is going to be an expense that you're going to have that people don't really talk about. So you probably already had your initial expense of the loan application, which is roughly about $500. And then when you need to call out that HUD contractor to review, he's also going to be expecting some money, maybe around $300 to be able to do this. So people don't really talk about that piece of it, but that's definitely an added expense that you want to keep in mind. But once that HUD contractor signs off on the property, then it kind of moves into that next phase. And now it starts to get back to a normal transaction in terms of going to the underwriter and waiting for that closing to happen. So through this 203K, you can also include things like your landscaping can be included in there, your mechanicals, your roof, even your appliances can also be, depending on which 203K product you use, but your appliances may also be able to include into that product as well. So as you're preparing to close on the property, you want to start making sure that you have some dates and things ready and lined up. So that contractor, making sure and staying in communication with that contractor to let them know, hey, you're going to be closing. So you want to make sure that you get on their schedule and you're prepared so that you don't lose a lot of time in between there, trying to close and then trying to figure out and scramble to find the contractor. Oh, we're ready now. And then that contractor it cannot move forward until a couple weeks out. So typically, I've seen this next part handled a couple different ways. Sometimes the contractor that you're working with, they may need to have some money up front because they may need to do some of the work without being paid initially, like without a draw happening. So you want to make sure that contractor is in a stable position and communicate with your loan officer to understand what is going to be required of the contractor. When will they get paid in the process? Because not all contractors can float the money and wait to get paid at the end. So you may need to work with a contractor that can wait until the end of the project to get paid. Yeah, I hate to say this, but in one way that can be a good thing because it's a little motivation for your contractor to move through the project quickly, knowing that at the end of this is when they're going to get their check. So they may move through the work a little quicker because they're trying to hurry up and get paid, versus the guy that gets to draw, and they may not tend to, but they may end up dragging their feet on there. The other way that I've seen it handled, some lenders will actually do a draw system. That draw system allows the contractor to purchase the initial supplies, any wood or materials that you're going to need for the transaction. So they may either allow a draw for materials or just initial draw for that contractor. And then usually you have to sign off on there as the buyer saying that you approved and you accept the work that was done. So overall, the process is very much like a traditional FHA or even a conventional loan. The main difference is, number one, having a contractor lined up for you. Number two, understanding the time frame that's required, anywhere from that 45 to 60 days to close on there. And then three, making sure that you're not getting in over your head, because it can be a little bit overwhelming. It sounds fun in the beginning, finding a property that needs renovation, customizing it like your own. But sometimes people get a little overwhelmed, even though they're hiring a contractor, with everything that needs to be done in there. So there you have it. There's the information on a 203K loan product. If you are thinking about buying a home and maybe you want to foreclose a renovation property, I'm happy to talk to you, connect you with a wonderful lender. I definitely suggest that you reach out to me first prior to talking to a lender. All lenders can't be treated equal, just like all realtors should not be treated equal. But when you come to me, I have a number of resources that I can connect you with, proven lenders that will get you to the end goal, which is to the closing table. So if you are not already, please subscribe to my channel. I provide lots of information like this all the time. I like to go live, and I go live at various times to provide you with updates, resources, tools, everything you need to get through your real estate transaction and the home buying process. I love it. It's my passion. I have over a decade of experience in this business right here in the Cleveland market, helping Clevelanders grow through wealth, build wealth for them and their family through real estate. So join me. Click subscribe, like, share. See you next time.